What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 12th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here today to try to answer a critical question, and that is whether or not the bleeding in crypto markets, the sell-off we've seen in Bitcoin and altcoins, is done for, or if it's going to continue. But more importantly, I want to get down to the critical question of really whether or not it's time to buy or time to continue holding, because I think that's the more imperative question, and I want to talk about not only the data science, the previous history that we have to work with, the important things like the ETF inflows, the whole picture to really understand whether or not it's a reasonable time to get into crypto or if people are starting to run for the hills. And we're also going to be diving into the stock market and talking about the recessionary fears that are on many people's minds and what you can watch for in order to understand whether or not the alarm bells are signaling off or we've got more room to go up. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, grab a cup of coffee, stick with me here. I think you guys will like it. So let's go ahead and just dive straight into it, guys. No, I understand a lot of people obviously felt a lot of FOMO off of the rebound, off the lows. We had a 33.52% correction from the prior all-time highs back in March of 2024 up to that point of the lows back last Monday. And I understand a lot of people obviously seeing the wick off those lows up to 53,000 for the close, the continuation here to 62K. Many people felt like they kind of missed the boat here, and there was a very quick and swift rebound. Definitely something that was initially looking in favor of the bulls here. But there's something really important to focus on here, guys. And as we've talked about in this channel, this was the same case back here in July. We were even really interested in some of the news around, talks of the U.S. government holding its Bitcoin reserves, central banks and governments potentially buying Bitcoin in some way, shape, or form. But at the end of the day, the biggest thing I've emphasized, if you go back in my videos from May, April, ever since we really sold back before the initial sell-off in April, we locked in a lot of great profits from quarter one. The big thing we've emphasized here is that unless Bitcoin can really have a solidified weekly close above, generally speaking, around this $72,000 range, which had been proven to be resistance time and time again, unless we got that, we're not really interested. And there's a couple reasons for this. One, we've already had a great run-up, so we need to be cautious here. But second off, it's imperative to understand that we are trading altcoins for the most part, because Bitcoin from this point on, even if this is a new cycle and we are going to somehow clear through the prior high range of the past, which is still, I think there's a fair argument to be made that we're still struggling here. Some people would say we've gone a little higher, we're making it support. I don't know. We've spent the longest period of time at roughly around the same range of a prior cycle high. And even from there, if Bitcoin were to go on, realistically, we could go to maybe $90,000 or $100,000, which would still be great, if you happen to pick Bitcoin at the lows. But we're here to make multiples. We're here to trade altcoins. And until Bitcoin really gets back above those highs and really starts trending again, which it hasn't done for the past couple months. In fact, it's been the longest period of time at a prior cycle high, all the way back in 2021, mind you, that we have been trending sideways. Until Bitcoin can really achieve that, then altcoins are going to just continue bleeding. And I think the price action over this weekend, really over the last 4 trading days, signals that, not in just altcoins, but in Bitcoin. Take a look at Bitcoin's price here, guys. Even after a 33% nice, healthy correction over multiple months, we are facing resistance at the 200-day. And we just barely touched the 21-day and got rejected multiple trading days. Right? That yellow and green line pair right there, it's a bit difficult to see because we got some different moving averages. I'll turn off our drawings here so maybe you can see a little bit better. But the blue lines here are the 200-day. Right? And you've got the 21-day here that is holding down price. We couldn't even get a daily close in the pocket. Every single time getting faded there. What does that tell you here about those who are buying the dip out here? It either tells you that those who bought the dip here are taking profits, or that they're buying into what they think is the bottom, whereas other larger players in the market are unloading at any good time where prices are trading higher. But it's important to note that this is another lower high here, and it is a much more dramatic lower high versus the prior ones. Every single time we came up and got relatively close to that 70K range. This time around, we're facing resistance at 62K. and we're fading again. So I'm not saying here that, it's the end of the world here. Right? I'm not even saying that we're going to go below those prior lows at 49,000. I don't want to speak in absolutes here, and no one's got a crystal ball. The fact of the matter is, though, is that I have no incentive to try to chase buying here. And beyond that, if we're seeing weakness in Bitcoin, we are most likely going to continue seeing it in altcoins, as we'll dive into later. But again, beyond like price action, just take a look here, guys. Since back in, basically the same time back in June, so 2 months ago, right, there was a total of 879,000, or roughly 880,000 Bitcoin that were stored in ETP products or ETFs within the United States, right? People might say, what about Hong Kong? What about Australia? What about all the other markets and the EU, the Eurozone? At the end of the day, guys, you can include Canada, all the different countries out there. Most of them are either neutral or negative. So I'm actually playing to the advantage here of the Bitcoin bulls. I'm just focusing on the US. So 880,000 Bitcoin here, right, at that time. We now have 921,000. So a little over 40,000 additional Bitcoin, give or take, if I got my math right there, right? Not bad, right? We're still seeing an expansion here in the amount of Bitcoin, maybe a little bit less. But the main point here that I want to get to is that while that might sound like a lot of Bitcoin to many people, that is a very abysmal and weak number when you consider the amount of long-term holders who are offloading off of this news, who are selling, with Mt. Gox, with the German government, with the US government unloading 10,000 Bitcoin the other day. You've got people who have been long-term holders for a long time, now finally starting to unload into the market. And this is really the infinite liquidity machine we were all promised. We were told that Wall Street was going to buy up our bags. And we can see in the on-chain metrics at this point, it's just not happening here. I don't mean to be negative. I don't want to beat a dead horse. It's just not playing out here. And you see that within price action. You don't need me to tell you that, right? It's not me trying to be biased or bearish. We're setting lower highs and lower lows. And until that really changes, until there's actual trend direction, the idea of taking immense amounts of exposure here at these levels, buying a lot of crypto, just doesn't really make much sense to me. If the 200-day wasn't even being touched back here after the post-ETF correction, we were getting buyers at the 100-day and then trending so clearly here at the time, not even coming down to touch the 21-day moving average. It was so optimistic. Now we are at a lower price range and we're facing resistance at the 200-day. Those moving averages are going to tell you all you need to know. You don't need me to tell you. You don't need the perma bulls out there who will just tell you Bitcoin's always going to go up and to the right. There's never going to be corrections. There's never going to be stagnation. I'm here to tell you guys that the cycle theory of yesterday no longer works anymore, in my opinion. And I think the near 5 months here, it's coming up on 5 months, that we have stalled here and we have not set new highs. That is not like previous cycles of the past. This is a really big sign of changing times here. And I recommend checking out Colin Talks Crypto. Has a really cool free index. I've given it a shout out a couple times. Cool guy. Definitely check this out. It's colintalkscrypto.com, the CBBI index here. And essentially, what it showcases here aggregates a lot of the data science models for Bitcoin. And we can see that we already got to 82 points here, which isn't as high as prior cycles. But I want to make the case here that even if we might have that ability to eventually go on towards 90 or 100K, which I definitely see is still in the cards, I'm not here to completely shoot that down. And again, I don't want to speak in absolutes. I don't think it makes sense. But it is important to understand that we have seen in prior cycles this high here around the 80-point range going all the way down to 48 back in 2013. We had this in a correction over the course of a couple of months. We may very well be seeing something similar here, maybe over a slightly longer period of time. We only went down to 59 points. So again, I don't mean to use the data science models as an absolute point here, but it's at least a good reference point here that we've seen stuff like this before. We've seen in other cycles, albeit at lower levels, like in 2019, we overshot here from around 7 points on the lows, went up to 59 and almost came all the way back down here to 18 points. So it's imperative to understand that sometimes, we're going to see these more exacerbated corrections. And yeah, there might be a light at the end of the tunnel that eventually recovers, but I don't think this is that time to buy. The weakness in the Ethereum to BTC ratio is another example of this. The absolute terrible launch of the Ethereum ETF, similar to the Hong Kong China Bitcoin ETF, right? there's all these ETF hopes. Oh, we're going to get like more money pouring in the markets, more institutional capital. They've been waiting at the floodgates. They just couldn't buy all these years. We had talked for a long time that the ETF narrative was being sold to people. It was being oversold. There's too many promises being made that it was going to be such a big deal. And look at the ETH to BTC ratio here, guys. Take a look at the daily. Just absolute flush down. Now down below the 100-month average. Now, this to me, above all, leaves me in a mixed position, because obviously I like discount opportunities in the long-term time frame. Give me better risk-reward entry setups for longer-term swings. But at the same time, I don't like to buy into just weakness. I need to see some change in the trend, and I don't want to pick bottoms. I don't want to try to catch falling knives and guess that I'm getting the lows. I want to know that the trend is on my side. And I got to tell you, as we talked about this so many times. I mean, this has been the truth since back in 2023. We've warned people constantly that if you look at so many of the long-term altcoin charts, the long-term line of support that was held from December of 2016 to almost December of 2023, right? So you're talking about 7 years here. 7 years of price action was broken. And ever since then, we have not gotten a serious rebound to test that line. Instead, we've gotten weighed down by the 200 week. And now we are now down below not only the 200 day and the 200 week, we are down below the 100 month. What does that tell you about the sentiment? And I have to be honest, again, we have echoed this as well, guys. The fundamentals of the Ethereum ecosystem, as well as most L1s out there in DeFi, GameFi, NFTs, you can name any narrative out there. What is new and exciting in the last 2 or 3 years? I can't name you one application that's got me really, really juiced up. I'm interested in some infrastructure plays in this space. I'm interested in some projects, but not something that I have to use every day. Like, that's just me being honest with you guys beyond my thoughts on price action and trading. You take a look at others' market cap here again to kind of dive into the altcoin space. I want to dive into some individual altcoin charts to show you guys what I would generally be watching and what I'm thinking about the price action. But just take a look here, guys. We got shot down at the 200-day and the 100-day pockets, the purple pocket and the blue pocket here. We had targeted a correction down here, pretty much called the temporary bottom here in July. Nice significant rally, 40% up. Got shot down at those long-term moving averages, couldn't hold in the 21-day. Got another flush down, and get this, guys, we are now facing resistance at the prior low range here, and we can't even come up to test that 21-day moving average. That just looks really bad to me. This looks to me, again, as I was just hinting to about the fundamentals earlier, that meme coins and all these things that we made great returns on in Q1 when it was trending, right? But we locked in profits because we knew that there was no fundamentals in these things. I think meme coins are a sort of metaphor for how the industry has looked at itself and said, wow, we really don't have much to show for over these last 7 to 8 years since the launch of a variety of new altcoins and tokens since back in 2017 when we started the channel. I mean, the sentiment back then, 7 years ago, was so much more optimistic, so much more forward-looking, that there was going to be a lot of fundamental potential, a lot of new industries disrupted by crypto. And now, what have we got to show for? Meme coins. That's all we've got. That's really where all the retail liquidity has gone, all the speculative capital has gone. And that's okay, I don't mind trading them. But when you don't have fundamentals, or you don't have people actually believing that there's something there, then people take profits. And there's a lot of shady actors who are taking advantage of that momentum and just popping out new meme coins, being diluted out the wazoo. So that's why you're seeing these significant lower highs. I mean, we took profits back here, guys. Mind you, we closed all of our positions here right in this period of time in April, around $340 billion. And since then, altcoin market cap has gone down to 186 billion right now, with the lows being at around 150. So more than a 50% correction. We were not even bearish enough here, just to echo that point. And while dominance looks like it's at a healthy level where, again, as I mentioned, I'm not here to say that it might not be an opportunity to start buying, but I got to start seeing some signs of optimism. I'm not here to buy at the absolute lows. I want to start seeing some trend reversal signs. I want to get above that 21-day. I want to see acceleration in the trend. Right now, when I take a look at the altcoin season index from blockchaincenter.net, I'm seeing a decline here from 45 to 29% of altcoins outpacing Bitcoin. This just doesn't look exciting like in the past, like what we saw back in 2020 and 2021, when we had so many DeFi plays that were just really having their first moment. A lot of optimism coming into the space, rekindling optimism that blockchain and cryptocurrencies and Bitcoin were here to stay. There was a great rebound over the last 7 days in percentage terms across the board, usually around a 20% rebound across the board on a lot of plays. However, the imperative thing to understand here is that's coming out of capitulum of lows, guys. A 20% recovery after many of these plays are down 50, 60, 70, 80% is not something that really gets me excited. Again, we're not here to chase those lows. I want to see us clearing through the 21 day on so many of these plays before I get optimistic. And I'll just go ahead and demonstrate this here. We've got Render, right? One of the strongest DePIN or decentralized physical infrastructure network AI plays. Take a look at Render here. Do you guys remember back in like March and April when we were like watching the plays, and we basically weren't like going long Render in this case at this range. We did some trading in the Dash report here on the April lows and made a good, nice, quick trade within a matter of just like 2 hours and made really solid returns. But beyond that, just take a look where we are now. We're here at $4.50. Now, if you would have told me back then in March that we're $4.50 here in a couple months, I'll be honest, back then I would have been, man, I think I might like take that opportunity, going in here to the summer. However, guys, just take a look at how it's reacted with the moving averages. We are struggling not at the 100 day or 200 day, which mind you are all the way up here, nearly 100% higher from the general low range here at $4. We are not at the 21 day. We aren't even testing it. We are struggling at our 4-hour EMAs. These are our like momentum moving averages. These are usually the things we use to gauge like our strongest plays when they're holding support on these moving averages. Now, we can't even get above those moving averages. They're acting as resistance for Render at $4.50 versus the prior highs here at $13.82. That might change in the next 24, 48 hours. Maybe we start trending higher. Then I might get excited. Maybe it takes a week or so. But right now, man, that just looks abysmal. It looks really, really bad from a momentum perspective. And again, I really hope, guys, at the end of the day, like one thing it's very difficult for some people to pick up if they haven't traded for a long time, or maybe they don't understand my style and stuff as a content creator. I'm not here to be negative, guys. I'm someone who's a pragmatic optimist. I look up into the right. I believe in an innovative future. I believe markets do move up into the right over the long term. But like, guys, this is really not good from a momentum perspective. Same thing here with Fetch, or the new AI aggregate, which Fetch merged with Ocean Protocol and Singularity Net to create ASI. Right, that's the new token. And just take a look here. Right, we got some buyers coming in here on a huge volume, sell side day, a little bit of buy side pressure, grinding up here to 90 cents, and then just getting shot down to that 54-hour EMA, not even coming to the 21 day. I mean, I have to be honest with you guys, again, like going back to April and May when we started to see that we got out of the market, we were looking for potential bottom targets. We were calling for a lot of these places to come down towards their 200 week, around that range, or below the 200 day, and kind of like this would be the range where I'd be like, maybe some buyers will come in and Bitcoin will finally start showing the ability to move higher. And a lot of people call us bearish for that. When I take a look here at the chart though, I'm really shocked to see the lack of buyers coming here. I'm not totally shocked, because if you look at history, we've warned about this in the dashboard and on the YouTube channel. Altcoins will give up a lot of their gains. This happened for Fetch back here in February 2023 from 60 cents at its highs down here towards 16 cents. Fetch went from the prior bull market highs in September of 2021 from $1.17 down to 5 cents. Right, so this can happen, but I have to be honest, like, and kind of looking for that mid-cycle, a buy-side opportunity for a mid-cycle correction. We are not seeing it yet. Maybe it happens when we come down here into the 200 week, but that will have meant that anyone holding throughout this period of time just got totally wrecked. Anyone trying to buy through this range here is down on their money. And that's not something I like to see. It's why we've been hesitant to build altcoin positions, why we've told people to be cautious at these levels. And this, if you look at the BTC chart, it's even more apparent here. just a clear correction. Render is now equitable to the performance of Bitcoin since all the way back in October. So it's cut out all those gains. Fetch, same scenario here, down towards its November lows here around this range. Not a good look. Again, looking like it's going through a typical correction. Might get some buy side pressure here in the 200-week pocket as we saw here. That's why, again, I'm looking for opportunities here in the market. But again, the momentum's not here yet. Ordinals, again, ORDI in this case, bleeding against Bitcoin. Stacks, while it did get a nice rebound off the lows, is still really not looking that good here. Down below the 200-week for the majority of the past 2 months. Right? So not really signaling that optimism we need to see. I would again advise you guys above all to just heed caution in this market. Look for plays here that have solid momentum, that are starting to maybe shift in their trend, have strong fundamentals, play into time-tested narratives, and also offer unique components and potentially new narratives that we haven't really seen materialize in the crypto space. And I'm talking about looking beyond just the meme coins, looking beyond DePIN and AI, looking at other sectors. One of the big things that I think above all is time-tested is layer 1 protocols, infrastructure plays, and those in which are going to shine to become some of the new tech-savvy protocols that could really rival, I think, the likes of Solana and Ethereum one day. Again, albeit it might be a small probability, it's an opportunity to be able to come up and become one of those larger protocols to offer better dev infrastructure and user experience. One of those I definitely recommend you guys keep on your radar now is Zero. Now, Zero is one of our partners here on the channel. You guys have probably heard me talk about Zero a lot. I don't usually dive into the price action here, and I'm going to let you guys know, as always, if I talk about the price action of any project, whether they're a partner of ours or not, it's me talking about it out of my own heart here, my own analysis. And you guys can see here, if you're using that the momentum strategy that we've been talking about for any of these plays here, right, any of the projects that we're watching, this is clearly the first time in a while that Zero has been not only keeping up with Bitcoin, but has got some really nice resting on the short-term moving averages, on the 21-day pocket, and is looking like it's building up to its highest level in over a month, similar range where it was back here in June. And is not that far away from potentially breaking those longer-term moving averages. I like to see that here. So again, at the end of the day, this is something where the fundamentals are strong, the price action's looking good. If you guys haven't been diving into Zero, they have been constantly delivering. They've got a great cadence when it comes to pushing out updates as a protocol. But the major thing above all, for those who don't know, is Zero is focused on being the first major privacy-preserving L1 protocol in the crypto space. And they're not just focused on building their own, kind of environment similar to, for example, maybe Solana building an alternative to the EVM environment, but beyond that as well, they also have one of their major new breakthroughs, Zero zkOS. Now we're going to be talking more and more about this on the channel, talking about some of the fundamental developments around this. Might even get to interview Anthony, some of the members from the team. There's a really interesting team behind Zero, a lot of smart minds working on this, but essentially they're bringing into the picture something that's incredibly powerful. Whereas so many EVM forks exist out there, many of which just offer some degree of scalability because they have their own consensus mechanism and they're not the Ethereum network. At the end of the day, there is a saturation of EVMs. But the major thing that makes me really excited about zkOS by Zero is that it is a privacy-preserving EVM environment. So whereas all those other L1 and L2 EVM environments allow you to, utilize Uniswap or Compound or Aave or a variety of copycat DeFi protocols, in this case, they have built-in privacy. And I think that this is not only going to allow for obviously all of the existing activity on existing EVMs to be just as applicable, if not better, with the privacy-preserving features of Zero's zkOS. But beyond that as well, it is going to allow for a lot of enterprise blockchain applications. If you understand legislation like GDPR in Europe, it's the reason, in my experience working with a lot of enterprise blockchain projects, so many projects get stuck at the proof of concept phase because when they realize there isn't a right to be forgotten or an ability to have privacy over user data, then in this case, you're going to have issues with actually implementing wide-scale enterprise applications utilizing layer 1 infrastructure, similar to networks like Ethereum or Solana. In this case, Alp0 has got the backbone where if people want to utilize EVM environments similar to that of Ethereum, they can do that. Some of the most popular developer frameworks out there for blockchain technology. If you want to use a much more sound and resilient system long-term, I think, to build new applications and scalability and privacy preservation that Alp0 offers in their core L1 that uses WASM technology, similar to Cosmos, then in this case, you're able to do that. So the big thing above all is that I think at the end of the day, they've got the technological infrastructure to really stand out here. They have both their L1, they have their EVM L2, and this is going to allow for a whole range of applications that we just haven't seen yet. There's already a ton of ecosystem projects within the Alp0 ecosystem that I recommend you guys dive into. This whole ZKOS Alp0 page is really something special, and it gives a good visual perspective about how everything works together. So I definitely recommend you guys dive into it. We'll be doing some more conversations in the future. I don't want to beat it like a dead horse, but I definitely think you guys need to keep it on your radar. So going on from there, I wanted to go ahead and talk about the macro here. I know I've rambled on a good amount here, but this also goes for everything we've talked about here today, guys. About the sentiment around crypto markets. I also share similar concerns in equities. We've got some positions in equity markets right now, but otherwise, we got some of the kind of like market leaders of the future that we're looking for that we think could be really good plays over the next year or two. But the main thing I want you guys to keep in mind here is that while the rebound has been nice over the past trading week, we had the big gap down on Monday, and otherwise we recovered those losses and closed the gap. It is important to understand that we are well below that 21-day. We're still below the 100-day. And it is a question of whether or not we are going to be able to really clear through those ranges and start closing some of these gaps here, going back up to 18, 19,000, and be able to really continue trending higher on the indices. This is the NASDAQ, but it's the same picture for the S&P 500 and the Dow Jones. We are down still quite significantly here. And while I like the bounce off the 200-day, similar to back here in October, that's usually where buyers come in, it's important to wonder whether or not we're going to be able to get above those moving averages. You can even see here the chart. I want you guys to keep this in mind. A lot of the times, whether it's the 100-day or 200-day where we get buyers, you're going to have to watch to see whether or not you can clear that 21-day before you really start the next trend. That's really what we want to capture. We want to capture when momentum is in, when it is easy to ride the trend, and we don't have to play guessing games about whether or not it's time to go long, right? Once you clear through that 21-day, usually it is going to be a sign where you can start taking some risk, and you can have moderate stop losses to mitigate any losses if things start to roll back, and you play the same script over and over again, and then you capture the big trends. The big thing I want you guys to keep on your radar, there's 3 big things that I think you should keep on your radar, and then we'll talk about some of the more macro charts for recessionary risk or further correction in the market. First one is the US dollar to Japanese Forex pair ratio here. Essentially, we are continuing to watch whether or not the US dollar can regain strength and get above 148 and get above that 50 EMA on the 4-hour time frame, and then start to really test some of those longer term moving averages like the 21-day, the 200-day, and the 100-day pocket. Again, so far, looks good here. The more this moves up, the less risk there is of the carry trade risk causing any short-term disruption in the market. Maybe it causes pain later down the line, but so long as this is trending up and not causing further liquidation events for people who took the carry trade, then essentially this is going to play in favor of the bulls here. So again, keep that in mind here. I think if you get above the 50 EMA in the 4-hour time frame, that's good news for the bulls. If it gets shot down and we start trending lower again, that's a point for the bears. Next up, we've also got the VIX. And the VIX here is looking actually quite bullish, I would say, because we've collapsed through all of the short-term moving averages. We had a big spike up on Monday, which was met by a major flush down throughout the rest of the week. We moved from around 65 points, the highest point since the COVID crash, down here to 20. That to me looks relatively bullish in favor of the bulls because volatility is collapsing here and went through all of the short-term moving averages, making it appear that this is a short-term flush out in the market. Some people who took too much leverage on the carry trade got knocked out. Markets got a little finicky over the Iran news, whatever. We can point at what reasons it is. The VIX itself is speaking for itself. And the question here is whether or not we get below the 21-day here. I think we might play tango here over the next couple of days between these short-term moving averages and the 21-day. You get a solid close below the 200-week and the 21-day pocket here, which is basically, I'm saying if it goes to 17.5 points, chances are the bulls are back in control. We could go back to all-time highs or close to it and have at least a little grace period here in equities. And last but not least, one of the important charts, we'll beat it like a dead horse, guys, and that is the yield curve inversion. We got very close up towards this range. We actually went towards 0%. But as we talked about here, I think a weekly close, maybe 1 or 2 weekly closes, again, I don't want to speak in absolutes, but 1 to 2 weeks of close above 0% is where the recessionary risk gets real. And we weren't able to get that last week. We got shot down here. So again, maybe a little grace period here, but above all, on the grand scheme of things, guys, this gets me to talking about the important point here. We've got our kind of short-term metrics for concern of a broader correction. At the end of the day, there are a few key trends I want you to keep in mind. First off, the rotation. I think we are still in a position where the small caps could heavily outpace the large cap plays that have done well over the last decade. I think we are going to continue to see an unwinding from those large caps into smaller cap plays, considering we are at those .com level highs. Right, we emphasize this a ton here. The drawdown that we've seen here has been significant. We wiped out multiple months of gains, right, back to where we were back in October of 2023 in a matter of just 2 weeks. And I think that this is going to continue trending lower here. This is very indicative of what we saw back during the .com bubble. So if you are going long equities, in my opinion, again, we're going to see whether or not the Russell will continue to outpace the NASDAQ. That's an important thing to keep in mind. But the major thing above all is that we're focusing on small caps. We're focusing on mid caps. We're trying to find the next new narratives in the market that can really do well. We are not focused on buying into the large caps that have a huge weighting in the S&P 500 and the NASDAQ. If we just take a look at history, guys, this sends alarm bells to me that we are in the later innings here of this uptrend. I think the AI trend that we saw over the last 2 years has delayed the inevitable that these stocks are overvalued to a large extent. They are living off of stock buybacks. They are a few bad earnings reports away from seeing major PE multiple corrections that could wipe out a lot of the gains we've seen, or at least bring us back here to the 200 week or the 100 month like we saw back during the COVID era. I don't know if you get that much of a fell swoop. I don't think you get such a huge flush out in such a short period of time. It could play out over a longer period of time. It could be that we stagnate sideways for some time and maybe just broadly correct to the downside. So it may not be too severe, but I think that there's a very good chance here that you will very much lose out trading these stocks. And I would wait, for me personally, if we're really talking about the scenario where some people would say, Nick, I understand that this 100-year chart has held here in the S&P 500, that there's always been resistance there, but isn't the U.S. just going to print money into oblivion and we're going to go into a debt spiral? And in order to do that, they're going to have to print a lot of money to get ourselves out of the crisis. They're going to lower interest rates. It's going to be like COVID times again. And we just smash through this line and just start going vertical. That could happen. But again, it's the same point I brought up earlier with Bitcoin about the $72,000 price tag. I'd rather wait until this gets to 6,000 and I really start seeing the headlines and the clear signals that the Fed's really starting to take action and printing a lot, and that we're starting to go into some kind of currency devaluation era. That would be something that, again, I would want to be prepared for, but you can do that here at 6,000 points. Right? You don't have to buy in here at all-time highs, practically speaking, right, on the quarterly chart and be like, oh, better safe than sorry. Well, you can make the opposite argument in that case, that you're taking a ton of risk off of a potential scenario. I'm not saying that eventually the dollar won't lose a ton of its value. Maybe there's definitely a likely chance. History tells us that all fiat currencies usually devalue, but this is the world reserve currency. The dollar is still incredibly strong. You don't need me to tell you that. You can take a look at the dollar index for the longer period of time. The dollar's holding up well against other currencies. So again, it's not that it's not losing its value over time, but we're not seeing massive printing right now. Interest rates are high. This does not favor equities at the moment. So we have to be cautionary here at much higher levels than where we were back in October 2021, and when we see Bitcoin trading like it is right now. So this is all important stuff, guys. I hope this has added some value to your analysis. Above all, if you guys enjoyed this video, consider dropping a like. To summarize it here, we are remaining cautious. I want to be going long when we're getting above those 21-day moving averages. I don't want to be struggling at long-term moving averages like we are right now with Bitcoin and altcoins. I don't want to be struggling to hold the 200 week like we are right now, and struggling at our short-term moving averages in the 4-hour time frame that are acting as resistance, not support. We got to flip that coin. We got to flip the script. We got to start seeing bulls taking charge in the market. And once that happens, instead of chasing bottoms, instead of trying to capture falling knives that just keep moving down and down, we will have the trend on our side, and we're going to start seeing which plays are performing the best, which narratives are holding up well, and we're going to strike on those plays and be able to make some really great returns. We got to trade smarter, guys, because the market, especially crypto, is getting a lot more difficult to trade. And for those who are telling you that things are going to move in a bi-directional way, like they're either going up or down 24/7, that Bitcoin's going to go to zero or Bitcoin's going to $1 million, I would say you should probably ignore those voices. And to be fair, I've made that mistake before. I've been much more leaning bullish in the past. I've been leaning much more bearish in the past. But at the end of the day, guys, I've gotten much back more into my rhythm as a trader, focusing on the moving averages. And I hope you guys have seen that over the past couple months. I think we've been really accurate on trading the markets here. But again, no one's perfect. I make mistakes. I'll own up to them as well. I've made many mistakes in the past. But along with that as well, I think we've refined and learned from those mistakes. And I hope that it's helped you guys in your trading journey too. If you guys are interested in learning more about my vision on markets, where we're buying positions, when we're getting in and out, and just want to get those kind of time-sensitive alerts, you want to communicate with some of our most intelligent members in our community, I recommend you guys check out the Dash report down below in the description. It's a great way to support the content we create here on this channel. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.